The real estate market has crashed close to 30% here in the Niagara region. This has caused me to lose $1 million in real estate equity in 2022. Here's what I learned from that experience and how it has changed how I'm going to invest in 2023. My name is Koukun and I am a real estate investor and I run a real estate team here in the Niagara region. If you're interested in learning more about what we do, check out our free beginner's guide to investing in the Niagara region in the comments below. Let me share a couple of my experiences both during this market crash and some previous ones that may help give some perspective to the changes I will be making. My first real experience with facing a challenging environment was when COVID struck in 2020. There were fears of tenants not paying rent, and as a result, investors paused purchasing rentals for a couple of months during that uncertainty. I remember clearly how I was calculating how many months of living expenses I had available in cash, and that number was something in the 6 to 9 month range if we cut our expenses to the bare bones. Pretty much all of my net worth was in real estate at that time. I made a video in January of 2022 titled How I'm Preparing for the Next Real Estate Market Crash. I shared in that video how the experience of COVID made me decide to put aside some of my savings into index funds and more liquid assets outside of real estate so that if we were to face another situation like 2020, I would be more prepared. Well, the timing could not have been better on that video. Since February of 2022, the real estate market has declined by almost 30%. And as a result, my net worth has actually come down over $1 million since that time. This was the first time that I've experienced my investments go down significantly. Surprisingly, after the initial shock, it has not really affected me. However, what has made me concerned is how the higher interest rates have pretty much wiped out my mortgage paydown on my fixed payment mortgages. And I know many investors who have adjusting payment mortgages who are having their cash flow squeezed due to rising payments. Another risk that has never happened so far is that my realtor business has significantly slowed down, causing me to rely on my savings to cover my living expenses. During COVID, while there was the risk of this happening, within a month or two my business was allowed to reopen and the lower interest rates made it a very enticing time to purchase real estate. Now, I've got to this point in my investing journey by taking on a lot of risk in the form of mortgage debt and really going all in on real estate. I think that was the right move for me when I was getting started. However, I'm at a point where I'd rather slow down the pace of my growth and reduce the risk of being wiped out. Right now, through a combination of preparation and luck, I was fairly well prepared for this market crash. The preparation was keeping more savings and liquid investments, especially in my company. The luck was that I had a hard time refinancing my rental properties in 2021, which resulted in me going into this crash with my debt making up only 40% of my assets. So here's what I'm doing in 2023 and what I've learned from these experiences. First, it taught me there are risks that I cannot predict. I need to create a financial fortress that can withstand the ups and downs to allow me to be a long-term investor. This will involve having less mortgage debt than I was previously comfortable with, and even considering getting 5-year fixed mortgages on properties that I'm planning to hold and not refinance anytime soon. Second, never risk of a few things going wrong at once. Since our business has been primarily focused on serving investors, when my investments suffered, so did my source of income. I've said this many times before that the biggest risk is not if the value of an investment goes down, but rather if you are forced to sell. Learning from this lesson, our team is making a significant effort to expand into the traditional realtor business of helping homeowners buy and sell real estate. It's something we've wanted to do for a while, but we didn't have the urgency to make it happen since our existing business was thriving. Third, Warren Buffett says it's insane for people to risk what they have and need to try to get something they don't need, especially if you're already rich. This is something that has become really clear to me through this experience. Having savings and liquid investments have allowed me to keep our business stable and invest into this new initiative. It's also allowed me to be patient with my real estate investments, and I'm able to hold on to them for the long term. While I want my money working hard for me, it's become clear that I'm happy with less returns if it can bring more stability and lowered risk moving forward. And having more cash than you can possibly need in savings is not a bad thing. In conclusion, what I've learned from the real estate market crash in 2022 is to plan for the unexpected, understand how different risks can be related, and prioritize wealth preservation over maximizing returns. If you're a real estate investor or someone aspiring to become one, how has this market crash affected your views on real estate investing? Let me know in the comments below. And if you're looking to invest in the Niagara region, feel free to contact us in the description below, and one of our investment coaches will get back to you for a complimentary consultation. If you like this video, give us a thumbs up, and for more investing content, please subscribe to my YouTube channel. All the best.